Yeah, everyone, it's Jason, Jenkins Risk Management. I want to do an update. It's been a while since we kind of talked global macro, other than the traders that are with me every morning. Obviously, we go through the markets every day, sometimes several times a day. But let's start with oil. Oil's been in a nice range trade. There's a lot going on this chart. I just want to point out what you're looking at is I like to use, these are called regression channels. Pretty standard across any trading platform. You can draw them. And what they do is they pick up on the data set. You just drag it across whatever you amount of space on the chart or amount of data that you want to analyze, and it'll show you in standard deviation from the mean. And what's nice about that is I always teach the 3 sigma rule. You can look that up if you Wikipedia that or just look it up online. But the 3 sigma rule is essentially in statistics, you get hold on a sec here, guys. Screwed that up. You're gonna in statistics you get within 3 standard deviations, you're going to get the majority of your data will lie within 3 standard deviations. So when we talk about statistics, you talk about a lot of times a bell curve. And so most of your data points lie in the middle. Okay, if you do just select something that you want to measure in all these data points, okay, the majority are going to be right here in what they call the mean, and then 1 standard deviation out from that in either direction, you'll have like 67% of your data will lie. All right, when you go out here to 2 standard deviations, you get a greater percentage falls within 2 standard deviations. By the time you get 3 standard deviations out from the mean, so 3 standard deviations this way, 3 standard deviations out this way, that's almost like 90, you guys can double check my math on it, but it's like 98% of the data is going to fall within 3 standard deviations. That's called the 3 sigma rule. So in markets, that tends to apply as well. Now obviously we're talking about direction, so you can have up, sideways, and down. So of course price can extend outside of the regression channel, outside of 2 standard deviations. You can go, I've seen markets, sometimes when you look at the flash crashes across various markets, you've seen 6 standard deviation moves. All right, I mean, I've traded 2008 in treasuries, and you saw 6, 7, 8 standard deviation moves in a lot of the treasury market. So anyhow, this is showing you 1 standard deviation here, 2 standard deviation here. So this is 2 standard deviations. The wide, I call this the risk range. This is 1 standard deviation. And so it's good. It lets you know where you're at. So today we were high within that range. Okay, we were shorting yesterday here, up here at the top of the range. And then today we covered here and then covered here. All right, this is the 4-hour chart. So this is the intermediate term range. So that's the range trade we're in. Big picture, you're still bearish over, and we are still bearish overall the market. You're still in a long-term downtrend. These are our different buy and sell signals. Maybe you can see it a little bit easier on the 1-hour chart. It's just a better visual for me how I try to communicate. You can see we're in a downtrend also kind of going on here. So anyway, we've been playing this on the short side. We've had some nice signals, short cover. All right, we've been shorting every time we get up here, covering near the lows. If I take these off for a second, let's just look at the overall long-term downtrend. This chart wants to go slow. Come on. All right. Guess I got too much going on the chart, huh? So here you can see I was drawing a regression channel over the longer term time frame as well. But oil's still in a long-term downtrend. The weekly cycle is getting high, so I think that matters. If we redraw this channel, or not redraw, but if you drag it forward in time, you see it's done a pretty good job. All right, there's a trend line up here, so we've been sellers around this 50 level, and we'll see. This weekly cycle, guys, I know it sounds elementary, right? It sounds kind of childish, but look, this cycle has done a great job. Every time you cross up here on oil, okay, every time we cross up, oil's had a pretty good bounce for several weeks. You cross right here, comes back down. Had another cross right here, finishes the move. Cross up here, it's been in an uptrend for the last month. All right, so as this weekly cycle looks to move, the edge is to think, okay, the cycle is going to turn up, right? This is just an oscillation, but there's a rhythm here. Cycle high, cycle high, cycle low, cycle low. So you don't have to make things overcomplicated, but there's cycles going on here in these markets. Okay, everything cycles. So that's what you've had. You've had a nice cycle all year going on here. I think the next move could easily cycle back into the mid 40s. That's my call. All right, so we want to continue to work a core short here on the daily level. Again, this is the weekly cycle, and just look how fluid this has been. So I think this is probably the start of another down cycle. We'll see what if the dollar bounces at all, that's going to exacerbate this move also. So if we take out 48.5, I think you get the move to 30-day here, 47.36 area. If you can't make a higher low there, you should drop to this low, 45, and then it still leaves the door wide open for a retest of the low 40s. You actually had an inverse head and shoulders right here as well. Okay, so those are kind of the targets. You break this intermediate term low, you can move to here, and this would kind of be the deep, longer term cycle. So that's pretty standard on this weekly cycle. We'll see if that plays out. But that's been the right thing, and we've been putting out sell signals up here all year, and we've had several this week that have worked well for our traders. All right, guys, I'll cut the video on oil there because that was a little bit of a teaching topic on 3 sigma, standard deviation, risk, regression channels, and kind of how we view the risk range. So I'll hit a couple other markets later.